680's Kris McCusker joins us now to look at the business aspects of General Motors' move to close the Oshawa plant. Kris, let's start with the investors. How are they reacting?
Well, in short, the stock got close to its highest level since August, a jump of about 5% just today, still down by about 8% year to date. Now, keep in mind, the car maker did announce $6 billion in cost-cutting measures. So that means these plant closures, including the one in Oshawa. But translated, that means efficiencies for the company. That's something investors like to see. Stock in other car companies, interestingly, also moved higher in the U.S. today. Ford up by almost 3%, Tesla up by almost 6%. So investors seem okay with this decision.
Well, let's look at some of the spillover effects now, because we know auto part suppliers are also impacted.
Yeah, that's right. And unfortunately, the spillover effects are not going to be clear for a while, but that would include things like Martin Rea, which is an auto parts manufacturer out in Vaughan. That stock down by about 7% today. Its biggest one-day drop in more than a year. There's also the services sector, plus the jobs lost. All of that's going to cut into the economy overall. I am told the plant accounts for 0.15% of Ontario's GDP. But again, that doesn't take into effect all these spillover negatives, I guess, for lack of a better term. Now, it's worth noting, though, that production at the plant has fallen quite a bit over the last couple of years. Production has dropped from a peak of more than 3 million vehicles per year in 1999 to less than 2 million in the past 12 months. So it's going to have quite an impact, but I guess not as bad as it was back in '99.
Yeah, well, we heard it from analysts. We also heard it from Unifor today that people are just not buying the same cars like they used to.
Yeah, and this is really one of the more interesting aspects, I think. We're not buying sedans like we used to, and an economist at Scotiabank explained it this way.
Consumer preferences have shifted toward larger vehicles and away from your classic sedan. So, in a way, this is something that could have affected operations at the Oshawa plant, given that after end 2019, the only remaining vehicles that were to be assembled at the Oshawa plant were the Chevy Impala and the Cadillac FTS, which are both sedans and which are in less demand from consumers.
Okay, and one other interesting note. I know I've spoken to you lately off and on about potentially an interest rate hike by the Bank of Canada in January. Now, we have seen the price for oil drop significantly in the last month or so, so that potentially could slow down the Bank of Canada. We got a note from the Bank of Montreal today saying that this GM closure could also prompt the Bank of Canada to pause for a little bit longer. As it stands right now, Bloomberg has a 69% chance of a hike in January, just a 9% chance in December. So I guess we'll see what happens between now and then.
We will. Okay. Thanks so much, Kris.